This is quarter one's credit market overview. There has been an uptick in credit market activity relative to the previous quarter, with more issuers returning to the DCM. Auctions have been held in various key sectors, resulting in a total issuance of 52.27 billion, surpassing the 49 billion issued in quarter 4 of 2022. The financial sector was the dominant contributor to issuance, comprising around 40% of quarter 4 volumes, while the corporates and SOEs accounted for 21% and 34% respectively. The municipality sector once again did not participate in this quarter. Total secondary market trading volume for the quarter was recorded at 32 billion, down 5.9% from quarter 4. Key issuances came from the big 4 banks issuing senior, Tier 2 and additional Tier 1 paper. Eskom ES23 bond matured in January, which they refinanced by tapping the EL037 and ES26 bonds for a total of 15.8 billion. This was a large contributor to the increased total issuance this quarter. Furthermore, it is our understanding that Eskom will not come to the market for the next 3 years due to their debt relief program. Toyota Financial Services came into the market in January and issued 1.25 billion across new 3- and 5-year bonds. They returned to the market again in March, issuing 1.4 billion across new 3- and 5-year bonds again. They issued 2.65 billion in total this quarter. Pepco Holdings returned to the market after a 2-year break and issued 1.2 billion across 3- and 5-year FRNs, with the 5-year being favored. Investec Property Fund raised 1.9 billion by issuing 2 3-year, 2 5-year and 2 6-year unsecured FRNs. This included a 3-year green bond which will be listed on the sustainability segment of the JSE. In a market where demand is high and supply is limited, spreads continue to tighten, with some sectors now pricing at or below pre-COVID levels. Bid cover ratios remain strong during the quarter, leading us to believe that issuance spreads are compressing due to investor demand rather than improving fundamentals. Our proprietary credit rating tool assesses the default probabilities for over 200 counters. Analysis indicates that these have largely remained stable, with SOEs showing the most notable improvement, albeit of an elevated base. Given the volumes of debt maturing during 2023, we remain optimistic that there will be a further continued improvement in issuance during the year. We do, however, draw your attention to the recent global events. These are the Credit Suisse takeover and the collapse of various banks in the US, such as the Silicon Valley Bank. While very limited impact thereof on SA companies, we will continue to monitor these for any potential effect on the South African market. Our credit cycle indicator is driven by the microenvironment, and it guides our thematic positioning in that we take a systematic credit cycle cognizant approach. While our credit cycle indicator indicates a recovery of risk levels and moderation in default probabilities in the South African credit market, we continue to focus on defensive assets while selectively taking on additional risk when deemed suitable.